Hey everybody, today is Friday, the 17th of May, 2024, and we had a positive week for the markets, new all-time highs in several of these. You can see the only market down year to date is the bonds. They're down 7.5%, which means yields are up. And if you think that stocks can't go up because the cost of money is higher, interest rates are higher, you are wrong. Trade each stock, each market based on its own merits. Don't look for these theoretical relationships. Instead, if you're going to trade the SPY based on what the SPY chart is telling you, not on what it's doing versus the Zimbabwe whatever or whatever funky relationship you're looking for. And don't look at volume to think that the markets have to go down because it's been up on lower volume. As we mentioned on Wednesday, we broke to a new all-time high and we're holding on to those gains. This is the anchor from that gap up on Wednesday. We've held, or Tuesday rather, we've held that, and we're clearly above the week to date volume weighted average price, the rising 5-day moving average. There's just no reason to be bearish. I said on Twitter this morning, it looked like a good day for the short sellers to get chopped up. And I said that because when the market is up like this, a lot of people start shorting the market thinking that it's going to go down because it's up too much or whatever it is. But when you have a rising 5-day moving average, you're generally going to be wrong with those assessments, and it's going to end up costing you money just like it's supposed to. When the trend is higher, you give the benefit of the doubt to the buyers. So going into next week, we have the buyers still in control. Maybe we see a test and slight undercut of this all-time high and then perhaps continue to move higher, but I'm not looking for a top. I will only notice a top after the fact. If we break below the 5-day moving average, get trapped below the 5-day moving average, you'll see that my opinion will start to change to more neutral, and then as it makes lower highs and lower lows below a declining 5-day moving average, then I will clearly be intermediate term at least bearish on the market. Not necessarily that I would be trading it from the short side, but I definitely wouldn't be willing to buy the market below declining 5-day moving average. Just I wouldn't trade any stock on the long side if it's below a declining 5-day moving average. The Nasdaq also made a new all-time high and followed through slightly on that yesterday, but closed with, I think they call that a spinning top, which is another one of those useless candles that tells you nothing, because what is more important is what's going on under the surface. And under the surface, we still have higher highs and higher lows above a rising 5-day moving average. That's more important than one day's silly little named candle. So focus on what the market is actually doing rather than trying to come up with patterns and names for different things, because only price pays, and we're looking at price action. We're aware that this market has generally gone up on lighter volume, and we had that big volume day on Wednesday, but volume trailed off again here on Thursday and Friday. Does that mean we don't make money on it? Of course not. Follow price, and if you're nervous about volume, then keep your stops tighter than you might normally have, but definitely don't sell short the market because it's up on light volume. As I've mentioned over and over again, the Russell 2000 continues to grind higher. It does so in a very choppy way with all these gaps. I have completely avoided trading the Russell 2000. I'm going to continue to avoid it until it starts to kind of act like a more normal index, so I'm not really interested in talking about that one. Semiconductors, they pulled back here today right down to the 5-day moving average. So, we got a little pullback right to the 5-day moving average. And if you're a scalper, sure, there was opportunity on the short side. But right now I'm looking at this as just a pullback in an uptrend, no different than this pullback to the 5-day moving average, or this little price consolidation, or this, they all look the same to me until we see something like this happen and then we get trapped below it. Then I would say you no longer give the benefit of the doubt to the buyers on this time frame, and it doesn't mean, again, that you sell short, because the primary trend is still higher. We're above a rising 20-day moving average, 50-day moving average, 200-day moving average, etc. We're going to talk about crypto at the end of this, so hang tight for that if that's what you came for. The biotechs are starting to get a little bit of a pullback, and this is exactly what I wanted to see happen. This is what I sketched out, I believe, on Wednesday, that I want to see it pull back. And let me just get rid of my little sketch there. But you can see it's starting to pull back a little bit. I'd like to see it come down and hold along this 50-day moving average, and that 50-day moving average then start to flatten out as we get rid of this data over here. And then the 20-day moving average maybe comes up to it next week. And then maybe mid to late next week, there's a better opportunity in the biotechs for a low risk entry. But right now, I think just best to leave them alone on a basis of the index, certainly not on every individual stock. In fact, I put this one on Twitter today, MYGN, Myriad Genetics. Let's look at the weekly time frame. It's got room to run. It just broke out here on pretty good volume after an earnings report. Seems like it has the potential, I think, to get up towards that $28 level. The question is it a buy right here, right now? Well, here's the earnings report, so we put an anchor to that. We can't really see it very well on the daily time frame, so we'll go down to a 15-minute time frame. And here, let's just go to a 10-minute because that chart is clean. Here's the anchor from the earnings report. So since they reported earnings, we saw a little bit of a shakeout yesterday. Buyers are back in control, and I think next week you see something like this, and then this one's probably ready to get going with a worst case stop under there. So the point is, just because I'm not bullish on the overall biotech index doesn't mean there aren't individual biotech names to look at. And I'm still interested in TGTX, but this one we got stopped out of yesterday at Alphatrends. It's down. You know, I was hoping it would maybe hold the anchor from that gap. This is why, as I mentioned to subscribers yesterday, I still like the stock longer term, but I'm not going to let my opinion get in the way of giving my profits back in this stock. Now I'm looking for this stock to hopefully, you know, find some buyers at the year-to-date anchor. Maybe the 20-day moving average catches up to it. We've got the 200-day moving average rising. Here's why. We just got rid of these days right here. This was 200 days ago, and we're averaging this data instead of this data, which is why that 200-day moving average is advancing. Right now, the 50-day moving average is declining, and it has been for the last week as we got rid of this data and replaced it with data over here. On Monday, as we get rid of this data, Tuesday, Wednesday, Thursday, Friday, well, we'll start to see the 50-day moving average do this. And then as we're getting rid of these days, if the stock holds up, then the 50-day moving average will be declining, advancing rather, as well. So ideally, we find some buyers near this year-to-date anchored volume-weighted average price. That is a very important anchor. Let's review real quickly 4 such anchors that we had that I had spoken about and put on Twitter about a week and a half ago. And those were the year-to-date anchor for the S&P 500. I put it on this exact day. The next day, it triggered along right here at 504, and we've been up and away since then. Semiconductors, the same exact day, touched the year-to-date anchored VWAP, up and away. The Bitcoin, that was the exact low of this pullback, was the year-to-date anchor, and up and away. Now, the oil is the only one that's still kind of holding in this general area, looking for buyers and finding support in this area, but not a reason to buy it yet. Maybe above 79, 90, so maybe above 80, you get a little bit of movement up. But this one is structurally more damaged than the other markets, so I'm really not interested in trading oil anyways. We'll look at the other cryptos here in a moment, but I'm more in depth at the cryptos rather. BRCC was one I mentioned on Twitter right here. Was it right here or was it right? I think it was right there. Anyways, sold some on the breakout yesterday as it breaks this high, and the stock was up 15%, 12%, I forgot what it was. We sold some because I like to sell breakouts. That was an exact strategy used for a great swing trade in Crocs as well this week. We bought it last week right over here. Sold the first third at 136. We sold the first third at 139 to reduce risk on this gap. We got stopped out of we sold a third on the breakout here for a gain of $10 per share. And then yesterday we were stopped out of the balance underneath this low for a gain of $9.40. Now we're out of this stock with a gain of $7.50 per share. It's only $4 above what we paid for it, $4.50, and waiting for potentially another opportunity to get involved in Crocs. But this is the way you want to be as a swing trader. Buy the resumption of the momentum, get out when it starts to fade, and then look for a re-entry. So let me go back to, that's not where I wanted to be. This is where I want to be. So let's go back to this and take a look at the financial stocks. They continue to do exactly what they've been doing for several weeks, is to grind higher above that rising 5-day moving average, raise your stop above those higher lows, and see what the market gives you. The price target is always higher. It is not the measured move. We exceeded the measured move price objective. That's a level of interest. But you want to look at it and say, once it hits your level of interest where you think it might go, your job is just to continue to raise stops until the market tells you otherwise. Energy names starting to gain a little bit of strength in here. So this group, we saw a measured move down right to where it was supposed to. It's starting to gain some traction in here. I think if it pulls back like this next week, and if oil starts to firm up a little bit more, maybe the energy names will be good as a trade. Here's the anchor off of the high that we saw this year. So we see after finding resistance there and at the 20-day moving average, that red line, we're back above it. So maybe a little bit of a pullback, and then these things could get going once again. I was trying to think. I had a stock I was thinking of in that group that I wanted to talk about, but I forgot what it was. Let's talk about Bitcoin first. Bitcoin looks to me like, as I mentioned, we found buyers right on the year-to-date anchor. We got up to that 50-day moving average in the anchor from the all-time high, and we're pausing slightly in here. But as I mentioned Wednesday, Bitcoin and the cryptos, they don't trade like stocks. You can't always expect them to pull back and give you a lower risk entry. I would say that the measured move would give us a price objective somewhere near 68,000 actually, because the height of this 56.5 up to 63.5, you add that to this, and that gives you about an $8,000 upside. So maybe it's going to find some supply. Who knows? Ethereum. This one, we initially saw some strength on Wednesday here as well, and that strength ran right into the 20-day moving average, that's this blue line, and the year-to-date anchor. We saw a pullback on Thursday, and today we're back up through it. So now we want to see 30.25, 30.50 hold as support. If that holds as support, I think your next upside probably still looks something like what I sketched in on Wednesday, something like this. So looks like the buyers are back in control of Ethereum. The only thing that would really change that is a move under here. I just don't think it's going to be a rip-roaring rally yet, because we still have that declining 50-day moving average and the anchor off of that high. Whereas Bitcoin, the 50-day moving average next week will likely start to advance. So that'll do it. Have a good weekend. Thanks for tuning in.